George Gilder claims he found investment so good, it's like investing in Apple when it was 47 cents. I reveal the stocks being pitched by him so you don't have to buy his newsletter. There's multiple stocks to uncover, so we're going to jump into things. The picks in this presentation have to do with nanometer chips. Here's the clues for the first stock. This company makes something called ion implantation technology, which is essential to the nanotech manufacturing process. It holds over 800 patents related to this technology. Fortune ranked it as one of the fastest growing companies of 2024. The stock being pitched here is Axcelis Technologies and the ticker is ACLS. Here's what to know about this stock. Axcelis Technologies, founded in 1978 and headquartered in Beverly, Massachusetts, is a global leader in semiconductor equipment with a specialized focus on ion implantation. Its Purion platform serves silicon carbide, gallium nitride, and advanced power device manufacturing. The company operates debt-free with a strong balance sheet and a market capitalization of $3 to $4 billion, maintaining partnerships with major semiconductor fabrication plants worldwide. In Q2 2025, Axcelis reported revenue of $194.5 million, representing a 24% year-over-year decline, while achieving a GAAP gross margin of 44.9% and an operating margin of 14.9%. Earnings per share reached 98 cents, surpassing expectations. As a leading niche player in ion implantation technology, Axcelis serves major semiconductor fabs across the US, Europe, and Asia-Pacific regions, with a strategic focus on the growing electric vehicle, artificial intelligence, and renewable energy markets. Axcelis Technologies' strategic strengths and growth catalysts center on product innovation, financial discipline, key partnerships, and revenue diversification. The company introduced the Purion Power Series Plus in September 2025 to support next-generation silicon carbide devices, while the GSD Ovation ES enhances precision for applications in artificial intelligence and cloud computing. Financially, Axcelis maintains 17% net profit margins with strong positive cash flow, and a $100 million share repurchase increase reflects management's confidence in long-term value creation. Strategic partnerships include joint development with GE Aerospace, targeting high-voltage silicon carbide devices for aerospace, defense, and commercial markets. Revenue diversification further strengthens the business, with aftermarket services contributing 31% of Q2 revenue, $61.3 million, creating stable recurring income from its expanding installed base and providing predictable cash flows to complement the cyclical nature of system sales. Analysts maintain a positive outlook, with an average price target of $99 and a high target of $152, suggesting over 40% upside potential from current trading levels. Axcelis Technologies faces several key risks and market challenges that investors should consider. Revenue cyclicality remains a concern, as shown by the 24% year-over-year decline in Q2 2025, driven by memory market digestion periods and softer demand cycles that are common in the semiconductor equipment industry. The company is heavily exposed to volatile semiconductor cycles, fluctuations in the electric vehicle market, and risks tied to China's overcapacity, which can impact Asia-Pacific sales. Margin pressures are also evident, with gross margins slipping to 44.9% in Q2 and Q3 guidance around 43%, reflecting competitive pricing and operational headwinds. Competitive threats continue to rise as local Chinese manufacturers gain market share, while geopolitical tensions and potential supply chain disruptions pose additional challenges. Valuation remains a mixed picture. The stock trades at an attractive 19.5 times PE compared to the industry average of 35.4 times, but delayed growth risks and potential overcapacity in power devices temper its appeal. Analysts' low-end price target sits at $82, though Axcelis maintains strong fundamentals with a debt-free balance sheet and strategic positioning in the high-growth silicon carbide and power semiconductor markets. I think this stock is a buy. It was pretty beaten down this year and down from all-time highs. I think things will turn around for this company in the next few years. I'm going to reveal the rest of the stocks in 15 seconds, but before I do that, I want to remind you to sign up for my free report on the top 10 stocks to buy and hold forever. This report comes with no gimmicks, no get-rich-quick nonsense, just solid long-term investments you can actually feel confident owning. Click the link in the description to get your copy right now. Here's the clues for the second stock. This next company makes the laser systems that help make AI possible. It controls around 80% of the market for laser light sources. The company's market cap is 1/700th the size of TSMC. This is Coherent Corp and the ticker is COHR. Here's what to know about this stock. Coherent Corp, a pioneer in photonics, traces its roots back to 1966 when it was founded in Palo Alto as a laser technology innovator. Between 2003 and 2016, the company expanded its capabilities through strategic acquisitions, including Lambda Physics, Excel Technology, and Rofen Sinar. In 2022, It merged with IIVI Incorporated and rebranded as Coherent Corp, solidifying its position as a global photonics leader. Now headquartered in Santa Clara, California, Coherent operates in more than 20 countries with approximately 26,622 employees worldwide as of 2023. The company develops engineered materials, optoelectronic components, laser systems, and full-scale photonic solutions, serving a wide range of industries. Its industrial laser technologies power welding, cutting, and precision manufacturing, while its datacom solutions include 1.6T-DR, 8 silicon photonics modules, and VCSEL arrays. Coherent also contributes critical components for electric vehicle production and energy systems, and provides advanced instrumentation for medical devices and scientific research. Coherent Corp delivered record-breaking performance and showcased its innovation leadership in fiscal 2025. Revenue rose 23% from 2024, setting a new company record, while non-GAAP EPS climbed to $3.53, surpassing forecasts. Looking ahead, the company expects long-term revenue growth driven by the rapid expansion of AI data centers. At its September 2025 Innovation Showcase, Coherent introduced low-noise continuous wave lasers delivering 400 milliwatts for co-packaged optics to improve data center efficiency, next-generation 2D VCSEL and photodiode arrays optimized for AI network applications, and 100G ZR QSFP28 transceivers for enhanced network performance. Positioned as a rising star in AI data centers, Coherent now offers a complete portfolio of transceivers, lasers, and silicon photonics solutions. Strategically, the company sold its aerospace and defense business in August 2025 to sharpen its focus on core photonics markets. Financial flexibility was strengthened through a refinancing agreement secured in September 2025, supporting continued operations and future growth. Coherent Corp is navigating several market challenges despite its recent record revenue achievements. In fiscal 2025, the company reported a GAAP net loss of 52 cents per share, driven by acquisition-related costs and restructuring expenses. Market reaction was swift, with the stock declining 19.61% to $91.65 on August 14, 2025, following Q4 earnings and the announcement of a business divestiture. Historically, Coherent has overcome significant hurdles, such as the operational issues and product defects of the 1980s through comprehensive restructuring. More recently, US-China tariffs have pressured sales since 2018, though the company anticipates successfully navigating these trade challenges. Integration costs from recent acquisitions have also impacted operations, with workforce and structural adjustments made to achieve synergies. Adding to investor concerns, investigations were initiated in September 2025 regarding potential claims tied to stock performance and corporate disclosures. This is another company I like, but would probably wait for a price dip before jumping in. This stock is historically pretty volatile and can lose value fast. Here's the clues for the last stock. Two companies control the entire global semiconductor test equipment market. It's one of the two companies that enjoys a duopoly in chip testing. This is Teradyne, and I found the article that was being quoted in the presentation. Here's what to know about this stock. Teradyne Incorporated is leading the future of automated testing and robotics with cutting-edge solutions that power the semiconductor and industrial automation industries. The company is a global leader in automated test equipment for chips and advanced semiconductor devices, while also driving innovation in robotics with AI-powered collaborative robots, autonomous mobile robots, AMRS, and hybrid automation systems. With operations spanning the US, Asia-Pacific, Europe, and the Middle East, Teradyne maintains a strong international presence. Listed on NASDAQ under the ticker TER, the company holds a market capitalization of approximately $21 billion, with its stock trading at $135 per share, up 47% this quarter on strong momentum in AI infrastructure and industrial automation. Key financial metrics highlight this growth, with Q2 2025 revenue reaching $652 million and a quarterly dividend of 12 cents per share. Looking ahead, Teradyne projects significant expansion, with revenue expected to grow from $2.8 billion in 2024 to $4.4 billion by 2025-2026. Teradyne's strengths and market leadership are driven by its dominant position in semiconductor testing and its commitment to innovation. The company's robust R&D investments fuel advancements in AI-powered robotics and scalable photonics testing solutions, reinforcing its leadership across critical technology markets. Benefiting from the AI hardware boom, Teradyne has captured a 10 to 15% market share in compute testing and continues to trend upward. In Q2 2025, it delivered EPS of $0.57, surpassing expectations on the strength of AI compute demand. Strategically, Teradyne is expanding its footprint among hyperscale ASIC customers and has the potential to enter the merchant GPU market, positioning itself as a core player in AI infrastructure growth. Reflecting this strong outlook, Susquehanna recently upgraded its price target to $200, citing compelling 2026 growth prospects and the company's favorable AI market positioning. The stock has shown impressive momentum, with strong quarterly gains and a steady weekly rise driven by positive earnings and growing market share in AI testing. Teradyne faces several market challenges as it navigates a cyclical and rapidly evolving technology landscape. Its semiconductor segment saw an 11% year-over-year revenue decline in Q2 2025, underscoring the inherent volatility of the chip and electronics markets. Limited penetration in the merchant GPU space also caps near-term growth opportunities in one of the highest demand AI segments, despite the company's overall strength in compute testing. Operationally, Q2 2025 results were mixed, with revenue coming in below prior year levels, and ongoing strategic adjustments to shifting market dynamics could impact short-term stability. To mitigate these risks, Teradyne is diversifying across robotics and testing, while strategically expanding its presence in AI compute markets and investing in next-generation technologies. Despite current headwinds, the company's strong fundamentals and positioning in AI infrastructure support a positive long-term growth trajectory through 2026. While high reliance on certain sectors increases vulnerability, Teradyne's competitive edge in AI testing and robotics offers significant upside potential. Teradyne is an interesting stock, but it's the most overvalued of the bunch. I'd put this one as more of a borderline buy and would wait for a better entry. Don't forget to grab my free report on the top 10 stocks to buy and hold forever by clicking the link in the description. And if you're looking for lesser-known chip stocks, watch the video below. Mark Lichtenfeld claims a $20 stock could be the end of Nvidia.